Morning, guys, and welcome to today's edition of the London Session Open. Today is April 14th, 2020, and I hope you guys had a good Eastern holiday despite the lockdown across many parts of the world. We're going to take a look at stock markets and currencies, of course, and commodities as we usually do this time of the morning and see if there's anything interesting happening. Of course, there is. I mean, we have some good news overall in the world economy in regards to COVID-19, and numbers are actually down quite significantly over there. So, for example, let me give you guys a quick brief on that. So you have the, let me see here, there we go. So you have the total number. So as you know, I have my own index. So if I look at countries like Italy, Spain, France, Germany, UK, and the US, that number here is declining to 3%. So the daily growth change of new viruses in these countries is just 3%, which is some solid numbers. And what's happening here overall is that we have essentially very low numbers everywhere. Spain, they already started to open up their economy a bit, and France is going to follow, I think, on the 14th of May. And there's also, I think, talks a little bit about Italy. I don't remember exactly, but I know France is talking about it. And in the past, as I told you here in this daily update, we have Austria, Czech Republic, Germany, sorry, not Germany, Denmark and Norway talking about opening up their economies. And we're seeing improvement. You know, the number of people on intensive care units is declining, and we're seeing peaks. Not everywhere, of course. Not every part of the U.S. is doing great. I mean, in fact, we're not doing great. It's more about that we are going away from that disastrous scenario where some people thought the world was going to end. And some people have been waiting for that to happen. They sort of have their own little bunkers and everything. Well, they don't actually think the world, they don't actually want the world to end, but they prepare for it, which is fine. It's fine to prepare. But there's a lot of people, especially on Twitter there, they want you to be really, really scared because they make a lot of money on that. I know some people as well. They always just talk about stuff like that, and I always try to stay away from that, scaring people and just looking at the market from a realistic point of view, because it's very easy just to get a lot of followers and a lot of people to like and retweet your stuff if you lean towards the conspiracy theorist sort of realm, because there's quite a lot of those on Twitter. Anyway, things are not that bad. Things are improving. Economies are opening up. Let's see what happens with the second round effects. Remember, man-made. President Trump, President Macron, Italian heads of states, Spanish presidents, whatnot, they're all told you stay at home. Of course, the numbers are going to go bad, and it's going to go bad in some countries, but not everywhere. I think it's quite interesting. I talked with another friend of mine in Sweden. He works at a big factory, a big truck maker. I think there's not so many truck makers in Sweden, and he hasn't been working since February, and for 3 months now they are now working. And the reason why they started to stop working already in February because they couldn't get parts. So it must have done due to the shutdown in China. So they couldn't get parts to construct their trucks. But these guys, when they make money, they make good money. So what happens here is that for 3 months he's just at home, and they're not they're paying him. And I think afterwards, if he would get fired, the way the system works in Sweden is that you get like 80% of your salary for like a year or so if you pay into these labor unions. And of course, Sweden is a bit special. It's not like that in many other parts of the world, but I think even in France you get like pay for like a year or so if you can't work. So things are not great, but they're not as bad as people think. Anyway, I'm starting to sound like a parrot now. Let's take a look at the markets then. So the German DAX. So last week we said look to buy down here, and before that we said look to buy here, right? So, but the last move was here, buy here for this to go up. Well, look and behold, we're up, and this is a good little spot to book profits. And I think if we go down to 10,394, then people are gonna buy here again, with stop losses just down here. So this is a good little spot to book profits. We're hitting straight towards that move here. And if you just look at it from a big picture perspective, you know, we're going up with 35%. And we have recuperated a bit more than 50% of the slide. And I think we can recuperate a bit more, maybe 61.8%, maybe even all the way up here. I don't think though we're gonna go all the way up to the 2020 highs today or this year necessarily, because it takes about 2 years to recuperate such a decline statistically. Also, if you look at what's happening in China, you know, they're at 62% or so of their start of the year value, where they typically are at 80%, which means that the economy bounced back, but it's not up at full capacity as it usually is, or at 80%, which is typically full, what we saw last year, right? So I think it's the same thing here. We will open up. Some people are going to go back to work. Maybe 50% of the lost their jobs are going to go back to a job like nothing happened. And then you'll have those, you know, maybe 50% of the remaining 50%, so 25% in total, they're going to struggle a bit. So we're not going to go 100% up, but we're probably going to go up a bit more. So I'm happy to be bullish, and then we can hopefully see this. And then I would like to just take it day by day, because if we reach these levels, it would not surprise me if we eventually come back down, tumbling to 9,350. Might even go down to 8,350, because what's going to happen is we're getting all these bad numbers. The next step is going to be, we opened up the economies, but the bad numbers are still there. So if you still see bad numbers, even after the open economies up, so if you still see bad numbers by the fall, you could potentially again see the markets go down again. Not that it can happen earlier than that, but the general idea, when they open up the economy and we're at 61.8%, then that's priced in. After that, we need to wait and see what happens. But for now, let's just be bullish. Here's the S&P. So the S&P, we missed that little entry here that it was to buy down here somewhere. And we went down over the holiday, but we didn't go low enough to look to buy. I'm going to leave it the way it is right now at 26.79. So it's looking bullish, but I want to leave it the way it is. And this is actually quite interesting. So today we're doing a little bit of a detour. I'm going to show you something interesting. This is the Spanish stock market. So the Spanish stock market is actually triggering an ascending triangle. You got a high here, high here, high here, and high here. And then you can just draw a trend line like that, and you get yourself an ascending triangle. And I think overall this market definitely needs to go up a bit. And I think pull a level like that, you get yourself maybe a 935 point move. You had the attempt to break to the upside, but what I think was happening today specifically, so you have the NASDAQ. I had some targets in there and some buy levels in play. We hit those targets in the NASDAQ 100. German DAX, we hit those targets as well. All the other stuff I've been telling has been going good as well. So we're seeing a bit of profit taking in some of these stock markets. So people, right now we had that break in the Spanish stock market, but I think people are sort of looking at everything else and say, okay, maybe we should be a bit careful. And I think there's an interesting game plan here where if we take out the high maybe tomorrow or something like that, or we take out the high after the other markets decline a bit, then that will be bullish. So keep a close eye on the high here in the Spanish stock market. The alternative is that everything just goes down a bit, and then we have a bit of a pullback, and then we would just look to buy here. I think overall in the Spanish stock market, I think we will probably go upwards. And as long as you're above 64.49, I'm going to be bullish. Now, if you happen to be bearish, just give it a few more days. You know, this is perfectly fine to be bearish. It's just that the technicals right now are not giving us that opportunity. And remember, I was bearish on the technicals on the way down. It's really important to remember that, because a lot of people, they're always bearish, and then of course eventually you get it all right. And some people are always bullish, and eventually you get all that right as well. But the art of trading is different. The art of trading is to be bearish on the way down, and then when things turn around, you want to be bullish. You're always going to miss out at the reversal points, unless sometimes you don't, but most of the time you will do. And on the way down, and many of the other markets, remember, I was bearish. And then I turned bullish when it was time. When The bearish setup got stopped out. That's when we started to turn bullish. All right, let's move along here. So let's talk a bit about gold. So gold, I was bullish last week as well. The idea was to buy, but we didn't go deep enough to the levels where I wanted to be a buyer, which was around 1644 or something like that. I don't remember exactly really because I haven't actually been tracking it, but the idea was to buy here, I think somewhere, and we missed this. But the overall idea was to be bullish, and the market indeed went to the upside, and we even took out and created a new 2020 high. And things are looking quite interesting from the long picture. We don't have necessarily a good pattern here, but we're continuing to see more bullish price action. Again, remember guys, we turned bullish in June 2019 down here. We're forced to turn bullish when the pattern failed, and then we took out this high, and we reached all those targets we talked about in summer of last year. And now we're pretty much close to these levels. And from a macro fundamental point of view, the way the governments are doing is that they're pushing all this money into, which again is pretty much predictable. And it's definitely a good reason to be bullish stock markets when they're all printing money. Like in the UK, the Bank of England has committed itself to directly finance expenditures by the Treasury. That's direct money printing. You will get inflation eventually, according to the textbooks. And gold is a hedge for that. Is it gonna work? I'm not really sure. Is it a safe haven? I don't really think so. But right now they're printing money in the world, and people like the idea that you can use gold to hedge that. So we're gonna continue with that little story and go with that. Of course, in the long run, yes, it makes perfect sense. But you know, there's been a crazy amount of dollar printing since the 2008 recession. But you know, you could have said probably the same in 2011. You know, just buy is very good. But you know, it's been like 9 years, and 9 years of lost opportunities if you bought at the highs. So again, even if it makes sense that this is going to go up, it's not always a best opportunity to always hold gold forever, unless you don't mind losing 11 years an opportunity cost. So for now, I'm bullish about 1640. Crude oil did not work out for us. So we had some success before, but the idea was to buy here somewhere. And then I said buy here. We went up. We got a 2 times reward ratio, so that went good. The first position as well, we said look to close that out at a bit of a profit. And then we said look to buy on a dip. And I was bullish above 23.44. That the market slid despite that deal. And it looks like, at least for the market, the deal was not good enough. Now, I don't remember how many barrels there are. How many liters are there in a barrel? I think it's 150 or something like that. 159. So 159 liters in a barrel of crude oil. So right now you got a barrel for 21.77. That means that every barrel costs 13 cents. So 1 liter costs 13 cents, sorry. And that's obviously much lower than water right now, like tap water. Sorry, not tap, bottled water, where you pay a pound for a bottle of Evian. I think definitely is a bit of a mismatch here. I definitely think that the way you have a situation now with the US also getting involved, that we're going to see some stabilization here. But for now, this market is going down, and the short-term trend is bearish below 27.4063. All right, this is the euro versus the USD, and I'm pretty much neutral here. The idea was to buy down here for this to go up, and we did go up. And now if we take out 109.67, I'm going to be bullish. Until that happens, I'm going to be neutral. Here's GBP versus the USD. Last week we said buy here, book profits here. That went well. And if we go down to something like 24.90, I'm going to be bullish. I'll just let it go down, and then probably going to go up again. Trend defining level is going to be 123.57. Dollar yen, I'm finding that a bit difficult and I want to ignore it, so I suggest we ignore it. Okay, guys, unfortunately, I don't have time to answer questions today because I have a meeting with some external people at 10 a.m. London time. So I don't want to be late for that. But I'm going to be back tomorrow, and I don't have any meeting for 10 o'clock. Actually, I do have a meeting for 10 o'clock tomorrow, but hopefully we can answer a few questions. Have a great day, guys, and welcome back after the holidays. And let's see if we can make some money this week. If not, let's make sure we keep the losses very small. Have a good day and a good week, and I'll see you guys tomorrow. Thank you, and bye-bye.